All right, so welcome once again. My name is Adetola-Freeman Ogunkunle, and this evening is another fantastic FBS webinar brought to you in order to help you simplify the pathways to your success in the financial markets. All right, so tonight we're going to be talking about discipline, all right, as the key that we believe can help you make your success even more durable. All right, so tonight, join me as we talk about discipline as a key to your success in the financial markets. So first of all, let's talk about discipline in trading. What is it and what are the benefits of discipline in trading? Discipline in trading is the key to your success as a trader or to successful trading. Why? Because discipline helps us to follow our trading plan and risk management tools, risk management rules, regardless of market conditions and emotions. All right. So risk management helps us to consistently follow our trading plan, all right, and our risk management rules, regardless of whatever it is that is going on in the market part time. Okay. And also regardless of our emotions. Discipline in trading also ensures that we are able to make rational and systematic decisions that are aligned with our long-term goals. Okay, which therefore means that if we are not disciplined in our trading, this would cause us to take impulsive actions, all right, and exhibit erratic trading behaviors and therefore incur significant losses. All right, so in order to be able to avoid the unnecessary losses that arise from poor decision making, okay, it's important for us to practice proper discipline. All right, it is very important for us to practice proper discipline. So having said that, let's go on. How exactly do you discipline yourself? Okay, now I'm going to be real practical here. A lot of traders assume that what makes them successful is actually their strategy. Okay, so you see traders who spend many years trying to perfect their strategy, looking for the next holy grail, the next popular strategy that they really want to learn and master. Okay, but what many people don't realize is that what the real reason why some traders are successful and others are not is not precisely strategy based. All right, it's a discipline related issue. Okay, so if you're going to be able to succeed in the financial market, it needs to begin from you being able to discipline yourself. All right, so how do you discipline yourself? The first thing is to ensure that you always follow your trading plan. Okay, and I know somebody is asking, okay, so what exactly is a trading plan? How do I develop a trading plan? Okay, so let me put it this way simply. A trading plan is simply, when you want to build an apartment, all right, or develop a building, you first of all get an architect to help you draw out the plan. All right, the plan specifies the layout, the view from different angles, all right, and it gives you, it gives the builders insight into exact steps, all right, measurements of things to do. So the same way, your trading plan is something similar to that. It's actually a plan that details your activities every single time you're ready to trade. Okay, so your trading plan is that description of, say, for example, if I trade support and resistance plus a candlestick pattern. Okay, my trading plan will contain, there will be a section under my trading plan where I would talk about my entry criteria. All right, what are the factors that I see before I take a trade? All right, and that could include, support and resistance, then candlestick patterns, then probably one oscillator, maybe the RSI or the stochastics. Okay, such that when I stand in front of the chart, all right, and I'm trying to trade, if I have not yet seen all of these criteria being met, all right, I am simply not going to take that trade. Okay, and I'm going to leave that trade because it hasn't met my entire criteria. Whereas if I didn't have a trading plan, I would most likely have been tempted to get into that trade. Okay, so aside the predefined entry and exit points that you would have a column for in your trading plan, you must also have a column that specifies how much you would risk per trade. Okay, how much you would risk per trade. And then finally, a column that specifies how you would manage your positions. Okay, how do you manage your position when it gets to TP1? Are you going to be taking partial profits, or are you going to be simply moving your stop loss to break even and leaving the whole thing to run? Or are you going to close out entirely once you have achieved 1:3 or 1:2 risk to reward? Okay, so these are contents of your trading plan. They are very, very crucial because those are the things that get you started, all right, on the path to consistently, growing and developing and becoming better in your trading. All right. So if you have heard me so far and you understand what I've explained so far, please drop an emoji in the chat box. Let me be sure that you guys are following me. All right. Let me be sure that you're following me. And as we go further, if you have any questions, there's a portion for entering questions and answers. All right. So if you have any questions, you can just type it in that predefined space. All right. Type your questions there and I would address it. All right. Fantastic, fantastic, fantastic. Thank you so much for those reactions and responses. So another way to discipline yourself is to keep a cool head. All right. One of the reasons why many traders are unable to be patient with their trading is because they risk excessively. All right. So when I have, say, for example, I have $1,000 account, okay, and then I have opened a trade and I am seeing that the drawdown on that trade, is already around maybe $220. Okay, because I risked a lot on that trade. So I'm seeing $220 drawdown on a $1,000 account. That's 22% drawdown already. So at that point, the honest truth is, I am going to be tempted to close that trade. All right. So I won't be able to keep calm and wait for it to actually go my way. All right. I'll just be more concerned about not losing more money than I already have. Okay. And by the time you close the trade, you can come back sometime later and discover that, oh, really, the trade later went your direction, later went your way. All right. But you already closed because you could not bear the loss. All right. And why couldn't you bear the loss? Because you risked too much. Okay. So you see that all of these things are intertwined. So if you don't risk excessively, it becomes easier for you to keep calm, all right, and to maintain a more objective posture. All right. It helps you maintain a more objective posture to your trading. Do you understand what we're talking about now? So the last way to discipline yourself that we'll be talking about tonight is to avoid over trading. Okay, you must be able to control the number of your trades within a certain period of time. All right, and I must really emphasize this. Don't try to quickly recover losses or to quickly make profit on every single move. All right, there's so many of you who, the only reason why you're not doing as well as you should is because you're always under pressure to recover your losses immediately. All right. I can see your question, Irav. All right, I'm going to address that shortly. So you need to realize that, when you lose a trade, you lost that trade because you did something wrong. All right, or because there was something that you didn't do. Okay, so if you lose a trade, because every lost trade is a lesson, all right, and it will either tell you what it is that you're doing wrong or what it is that you are not doing at all. Okay, so when you understand that and you lose a trade, the next thing is to first of all be able to sit down and digest, why did I lose this trade? All right, What do I do wrong that made me lose this trade? All right. And once you're able to clear that out of the way, you are ready to take the next trade because you've already learned from that loss. Okay. But if you've not yet learned from that loss and you're trying to quickly recover from that loss, what you would be doing would simply be to make things a lot worse because you're most likely going to lose that revenge trade. All right. Because that's what it's called. It's called revenge trading. And a lot of traders do it. Okay. So to answer Ira of how many trades should we take per day? All right. How many trades should we take per day? The answer is simple. The number of trades you take per day still depends on your amount of risk, your maximum risk per day. Let me explain. Going back to the $1,000 account, if I decide that every single day I am not going to risk more than 10% of my account or more than 15% of my account, it means even if I want to take 15 trades that day, even if I were to take 15 trades that day, I am not going to risk more than 15% of my account. All right. And that is discipline. That is discipline. So I have decided that this is the maximum risk I am going to take every single time I am trading. Okay. So if things don't go my way, I know that the worst case scenario is that I lose that 15% that I am willing to risk. Okay. Okay. Now, Sozo is asking if I recommend going to prop firms. But you see, a lot of you don't realize that there is a very big downside to doing that. Okay. And I want to ask you, you need to be sincere with yourself. How many people that you know, that you've heard about, that have gone the prop firm way, how many of them do you actually see, doing exploits? All right. Apart from those who are apart from those who are affiliates to the prop firms or who are affiliated with the prop firms and are trying to refer you to join their prop firms. Okay. How many traders have you actually seen that are not trying to refer people or recruit people to prop firms who are actually successful trading prop firms? That should tell you one thing. In fact, if you go online today, majority of reviews you would find about prop firms are going to be negative. All right, talking about the fact that, oh, I traded so amount with this particular firm, I made this amount of profit, and they didn't pay me when it was time to be paid. All right, they won't stop you from trading. They will only stop you from getting access to your profits after you have finished the trading duration. Okay, and they always have one brilliant excuse or the other that becomes their foundational reason for refusing to pay you. Do you get what I'm saying, Sozo? So let me know that you understand that, because I am not going to specifically tell you whether it's a yes or a no, but I'm going to lay out all the options in front of you on the table so that you can be able to now make that decision on your own. But do I recommend it? No. But, personal differences also exist. So I cannot categorically tell you, don't do this. All right. But my recommendation, my advice would be that whatever you have, all right, be contented growing it over time. All right. And that is still part of what we're discussing tonight, which is discipline. All right. Beautiful. John Kagimu, we're going to talk about that. How can one deal with FOMO? In case you don't know, FOMO is simply what we call the fear of missing out. All right, hold on. Let me quickly go to Sozo's question. We can't afford a big capital to start with. With a normal risk to reward, there's a limit to the profit we can make. Sozo, let me quickly point out a correction on that. Okay, you can actually make as much as 50% in a month. Can you start doing that today? No. Why? Because it takes practice. All right. But you must also understand that what you want to work with is a compounding ratio. All right. You want to work more on compounding your profits rather than just simply accumulating them. Okay. So the larger the account grows, your risk should be, in ratio to your equity, all right, or to your balance. So if I started with $1,000, all right, and now I have grown the account to $1,400, and I am risking 1% per trade, it simply means that on each trade now, I shouldn't be risking $10, all right, because $10 is 1% of 1,000. Now that it is 1,400, I should be risking $14 per position, all right? And on the long run, that becomes a compounded interest or compounded profit, okay? And that even serves as a bigger testimonial, all right, or as a bigger proof that you actually are good at what you're doing, all right? Because like we always say, charity begins at home. So if you have not learned to manage little and be profitable with it, all right, when you manage large capital, you are still going to be prone to messing things up. Okay. So let me come to John Kagimu's question. How can one deal with FOMO? I'm going to give you a very practical response to that question as somebody who has been there, all right, and as somebody who understands all of the emotional rigor that comes with trading, all right? So how can one avoid FOMO? The answer is simple. You must always remind yourself that the market will be here tomorrow. All right? The market will be here tomorrow. It will be here next tomorrow. It will be here for as long as the world currency is not unified. All right? The only thing that can make Forex cease is if the entire world begins to spend one currency. All right? But unless that happens, there is no way there would not, the Forex market will disappear. Okay, so you must remind yourself that as long as the market exists, there's always going to be another opportunity. Okay, and you don't have to rush it. There's always going to be another opportunity. Do you get that now? Okay, so John, let me know if you got the answer to your question. John Kagimu, let me know if that answered your question. We're going to move on right now. All right. We just finished talking about how to discipline yourself. Beautiful. So let's move on. Psychology in trading. Now, this is actually very, very crucial as well. All right. All right. Thank you, John. Thank you. I'm glad you got your answer. So let's talk about psychology in trading. Like I said, it's actually another very crucial and foundational knowledge, all right, that we actually need. So psychology in trading refers to the mental and emotional aspect of a trader, all right, the condition, the state of a trader's mind. Okay, that's what psychology in trading talks about. And it is the state of our mind that influences our decision-making process. Okay, and it is that decision-making process that determines whether the choices we are going to make are going to be rational or they are just going to be purely emotional. I'm going to give you a typical example. A friend of mine several years ago who had just started to trade, all right, he had just learned how to trade. Okay, and then he got to a point where he's been in a relationship with this very fantastic, beautiful lady back in the university. All right, I'm talking about when we were on campus, all right, back in the university. So he had been in a relationship with this lady. They have been together for almost about 6 months. And then the lady comes to his apartment one day and says, "Hey, bro, this thing is not going to work out anymore. All right, because I found somebody who takes better care of me because you are broke." All right, so the lady told him to his face that he is broke. All right, and she was leaving the relationship because she believes she has found somebody better who can take better care of her. All right. And immediately my friend heard this, his response, his reaction was to make up his mind that he was going to make so much money from Forex in the next 2-3 months that he was going to prove to her that he actually isn't broke. All right. So when he made up his mind to do that, he gathered a couple of us together, all of us as friends, we came together because we saw how heartbroken it was. All right. And we needed to pull together our funds, contributed about $500, gave it to him and said, okay, man, we're borrowing you this money. You've learned how to trade. So let's see how it goes. All right. And for the first couple of days, the results were fantastic. He had raised the $500 to close to about 2,600. Okay. And that was just the second day, all right, 2 days after he started trading. However, because there was a psychological issue, all right, his mind was not in the right frame, all right, in the right shape. At the end of the day, that same week, that very week, that my friend lost the entire amount of money. Okay, he lost the whole thing. And now it wasn't just the money he lost. All right, he had lost his girlfriend, he had lost the money, and he was now in a very serious debt. Okay, so beyond the heartbreak, now he has to battle with the debt situation. Okay, so I don't know if there's anybody on this call right now that can relate to this story. Okay, if you can relate to this story, I want to see you drop an emoji. All right, let me be sure that I'm talking to you. All right, I want to be sure that yes, what I'm saying resonates with you. Okay, or probably maybe you lost somebody dear to you, maybe your uncle, your aunt, a member of your family passed away. All right, and then you're trying to just take your mind off the pain by trading. All right, a lot of people do that. A lot of people do that. So the reality of the matter is your psychology, your mental frame has to be intact. Okay, it just has to be. You don't want to be pushed into making a decision that is not in your trading plan. Okay, you really don't want to be forced to do something that is not in your trading plan, that is not contained in your trading plan. All right, so you want to ensure that whatever it is you're doing, whatever decisions you're making, is strictly in accordance with what you have already planned to do. Do you get it now? Okay, so when your mental frame is properly positioned, your decisions become more rational rather than emotional, and therefore they have better results, all right, because they were based on logical factors. Okay, now let's talk about controlling your emotions in trading. And on the screen here, you can see a number of emotions. Okay, you see relief, excitement, fear, hope, confidence, impatience, regret. When virtually most newbies, all right, most newbies, when they learn how to trade, the first period they learn how to trade, a lot of them are filled with hope and confidence. All right, hope, confidence, excitement, and all of that can sometimes make them become impatient. All right, they sometimes become impatient. So they are no longer calming down to take trades because they've traded the demo account and they've seen how much profit they were able to make on the demo account. So now the decision is, yes, I have traded my demo account very well. This is my live account now, and I can't wait to buy my first Lamborghini. All right. How many of you felt like that, when you started? How many of you felt like within the next 3 months, you were going to buy a Lamborghini or a Bugatti, or you were already planning how you were going to buy your mom a mansion? All right. If you felt like that when you first started trading, okay, please let me know in the comment section. Just drop an emoji, drop a reaction. Let me be sure that I'm not the only one that has felt this. I remember learning how to trade and making up my mind that, yeah, because I'm the last born in my family, and there was that pressure on me to be like, let me prove to everybody that, man, Even though I'm the last born, I'm not the smallest, right? So that you know the African thing with family functions, nobody wants to show up like a beggar. All right, nobody wants to show up like a small person. So, when I learned how to trade, it was just like, man, I'm going to prove to these people that my status has changed. I'm now a big boy. They ain't got nothing on me. Okay. That was just the impression. Let me prove to them so that the next family function, nobody's asking me to go wash plates. Nobody's asking me to go clean the chairs or arrange the tents or anything. I just want to drive in with a very nice Mercedes, and everybody's saying, oh, you're welcome, you're welcome. That was my plan. All right. And I was already calculating that, oh, yes, in the next 6 to 9 months, all right, I should have blown, because that's what we call it here in Nigeria. You say, oh, that person has blown. All right. So my calculation was just give me 6 to 9 months. I could not blow. All right. And of course, I did blow, but it wasn't to blow up. All right. Because what I blew was actually my trading account. Okay. And that happened. In fact, it wasn't up to 2 months. So indeed, I blew, but it was my account that I blew. Okay. So, being an African is fun, man. It's really interesting. It's really interesting. There's so many amazing things that we have as part of the African culture. Okay. And that period taught me humility. I came back to my last born position, went around all my elderly siblings, begged for money to survive. So even I was planning not to need anybody. I wanted to be independent. I wanted to be financially free. And then I was in their DMs, calling them up on WhatsApp and saying, hello, big bro, it's your younger brother, anything for me, things are really not nice over here. So, of course, the next family function we had, I cleaned a couple of chairs, washed a few plates. It was fun. It was fun. I enjoyed doing that because I knew that since I had done that, nobody was going to refuse to borrow me money or give me money to survive. All right. Because of course, the next family function, who would take care of the chairs and the plates? So they just had to help me. Okay. But I've come a long way from that point, all right, from being that clueless boy who just wants to hurry into success. All right. But it didn't happen all of a sudden. Are you with me? It didn't happen all of a sudden. It was important for me to build up myself to this point where I am now, all right, as a 7-figure asset manager. It took years, many years. All right. I've been in the financial market for over 12 years, but I tell people that I only became very confident of my status and my capacity as a financial markets trader in the last 6 years. All right, which means that for the first 6 years of my journey in Forex, I was simply babbling and just jumping from pillar to post and trying every new course out there, trying everything that sounds nice. All right, talk about binary, I tried it. Talk about gap trading, I tried it. Talk about inside bars, I tried it. I've tried several strategies. All right. But one thing that I was able to realize at the end of the whole thing was that the strategies were not the problem. I was the problem. All right. And how was I the problem? I was the problem because my psychology wasn't right. Do you get that now? Okay. So right now, if you're here on this call right now, okay, what strategy do I use right now? Okay, the strategy I use right now is a strategy that I created myself as a blend from all of the different strategies that I learned over the years. Right. So it's a blend. I call it the Templars trading strategy, but this is not a presentation to talk about that. Okay. So as I was saying, if you're here on this call right now, okay, and you have tried to learn more than 3 strategies so far, all right, you've tried to learn more than 3 strategies so far, please drop an emoji in the chat box. Sozo, to make 50% monthly is not difficult, but like I said, you cannot get there today. All right, it takes practice. And we're going to talk about some of the factors that can help you get there. All right. But I don't think you should expect that once you're done with this call right now, you go back to your MT4, MT5, and then start to make 50% per month. I honestly will not promise you that. Okay. I'm a God-fearing African. And if you're African like me, you know that virtually most families have an idol that they worship. So if I'm telling you something that is not real, I don't want to be tormented in my sleep by your family idol telling me, hey, you lied, you lied, you lied to my ancestors. Nah, I don't want that. Okay. So let's go on. So these are the common emotions in trading. All right. And we're going to talk about how exactly all of these emotions play a part in determining your success or your failure as a trader. Okay. So let's go on. If you're enjoying the presentation, can you just type, I love it? Just type, I love it in the chat box if you're enjoying yourself. Oh, yes, beautiful. Thank you, thank you, thank you. I love those reactions I'm getting. Fantastic. Okay, so let's talk about how emotions affect us. All right, and towards the end of this presentation, I am personally going to show you my own formula. All right, my own formula that I was able to develop after many years of losing my hard-earned money. Okay, so it's not going to be on the slides, okay, but I'm just going to mention it so that you can start to take note of it and then maybe start practicing it. Okay, so let's go on. How exactly do emotions affect our trading? Like I said, there are two different directions the emotions can go. All right, your emotions are either positive or they can be negative. All right, and somebody is saying, oh, come on, how can emotions be positive and negative? We're not talking about currents here. We're not talking about electricity. Well, there are emotions that help you make good decisions, and there are emotions that are responsible for some of the terrible decisions we make, right? Emotions like anger, frustration, depression, desperation are emotions that often propel us to do crazy things, okay? To do crazy things. So let's talk about how emotions affect your trading. When there are positive emotions like confidence, patience, calmness, acceptance, curiosity, concentration, all right, it helps us be in a much better environment. Okay, personally, let me tell you what, something that I do personally. In my trading room, okay, in my trading room, as you can see right now, there's a TV right behind me. In my trading room, I have a PlayStation, a PlayStation module, okay, that I go to whenever I have trades open and I don't want to interfere with the trades, all right, I want to patiently allow the trades play out, all right, to either my take profit or my stop loss. I go out of, I completely leave the PC and I go to the TV, set up the game module, and then I play. All right. Sometimes I could play there for 4 or 5 hours. All right. And then after 4 or 5 hours of gameplay, I can just come and check. Oh, beautiful, is in profit. And then I'm fine. Okay. And then some other time I come back, it has its stop loss. But at that point, I am not sad because I have definitely dished out several goals to my opponents that I played against. Okay. So even though I lost some money in my trades, I also won some reputation by beating the hell out of somebody else online. Okay. And usually when I notice that I've lost some money, what I just do is I go back to the PlayStation module and look for somebody online that I can share the pain with. All right. And what do I mean by sharing the pain? I just look for some innocent dude online that I can give like 13 to, beat them score a ridiculous amount of goals. All right. So rather than take that frustration to my own trading account and end up losing a lot of money, I would rather take that frustration to the PlayStation and find some innocent dude that I don't know from Adam and beat the hell out of him. And then I sleep, wake up the next day fresh, happy that I damaged somebody's reputation on FIFA. Do you get what we're talking about? All right. So this is part of the ways that I balance myself. Okay. You can't be a trader and not have hobbies. I hear people say, "Oh, I'm so committed to trading. I'm so determined. I'm so focused." But the truth is, you still need a break. You sometimes need a break. All right. So even though you're a trader, you need to have a hobby. Are you with me? For somebody like me, I remember when I just newly got married, that was the best time of my life as a trader. When I just got married and I was on my honeymoon, sometimes I'll place a trade, it goes wrong, and then I just go back to the bedroom, lay my head on my wife's thighs, and then she rubs my head, rubs my head, rubs my head, and I forget that I lost any money. All right, but you can't be single and not have hobbies. How exactly do you spend your free time? You know, at this point, I'm even tempted to shout Jesus on a motorbike. Of course, if you have a PlayStation 4 or 5, you should always be able to see the people online. You can just go and play an online match. Do you get it now? All right. So these are some of the ways that I'm able to cope. All right. These are some of the ways that I'm able to cope with bad trading days. All right. Bad trading days. The name is Adetola-Freeman. You can always find me everywhere. Do you understand what I'm saying? So you must be very, very smart. All right. You don't push yourself into trades when you notice that your emotions are not balanced. Okay. And that's why negative emotions like greed, impatience, frustration, anxiety, anger, desperation can often propel us to take wrong decisions. Okay. You can't be trying to buy a suit for your wedding next month, and then your plan is to trade your house rent to buy suit, buy wedding gown, and also pay your rent. How? You know, they gave you your dowry to pay your wife's family, your bride's family as the dowry, and you say you want to quickly double it. How? How? Uncle Solomon, how? Eh? Recently I've spoken with a couple of traders and I was wowed. One of them took his kids' school fees that he was supposed to pay in the next 3 months, all right, packed the whole thing, came to trade with it. Then he lost more than 70% of it. From $1,000, he had just about $220 left. Then he texted me on WhatsApp and was like, well, I was at that FBS presentation that you did, and I need your help. I traded with my children's school fees. I have $220 left. Can you help me raise it to $3,000? You know how ridiculous that is? Is texting me. We've never had a one-on-one conversation, but right now he's texting me to help him raise $220 to $3,000 in 2 weeks. And because I refused, he said I'm a wicked person. So oftentimes when you notice that your psychology is not balanced, all right, that your mind is not settled, it's simply best to do something else, all right? Distract yourself from the charts, okay? Just put your mind on something else, something absolutely risk-free, something entertaining, all right? So that you can rebalance your psychology, okay? It's really important, okay? It's really, really important. So if you're following me, please drop an emoji right now, all right? If you're following me, just drop an emoji. Fantastic. 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 Oh, beautiful. 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 And one other thing, let me quickly add this. Let me quickly add this. As a trader, please avoid trading when you are hungry. I know this sounds funny, but I am begging you, if you know you are very, very hungry, please leave the chat, find something to eat. I am telling you from experience, your beloved African brother. Let's share this heart to heart and keep it a secret between us. Okay? When you are hungry, leave the chart, do something else. Eat. Okay? Because you may not know, you might feel like, oh, it's just hunger. All right? But hunger also affects your emotional balance. Okay? Hunger affects your emotional balance. So even though you're trying to analyze the charts, there are certain things that you will not end up seeing. Okay, you're just going to overlook it, and it could be something that is actually a part of your trading plan. All right, a crucial aspect of your trading plan can end up being overlooked because you are hungry and you are not patient enough. Because of the hunger, you will not be patient enough to calm down and review the whole thing perfectly. Okay, and that's one reason why I do the majority of my analysis during the weekends. All right. So during the weekends, I outline, okay, these are the commodities that I want to take a look at. And once I've done all of that outlining, then I wait to just look for opportunities during the week. But the majority of the analysis is done during the weekends when I'm certain that I am in the best mood. All right. There's a movie playing, there's room to go around, play around, walk around. Okay. So that's part of the things that I do in order to be able to control my emotions. Okay. Because right now, that's what we're talking about, how to control your emotions. So the first thing on this slide right now is to learn how to cope with ups and downs. Okay? Let me ask you, when you came to learn trading, they told you that an uptrend is simply higher highs, higher lows, higher highs, higher lows. And they told you that when market is bullish, it will not just rise in a straight line. Right? If that is true, that's how the market moves, how do you now expect that your own account will not move like that? It's like somebody coming to tell you, a vehicle manufacturer comes to tell you, this vehicle that we have manufactured drives like every other vehicle out there. Then you say, no, my own vehicle must not drive like that. It must turn right when I turn the steering left, and it must turn left when I turn the steering right. At the end of the day, we know that you will end up having an accident. Okay, so we know that the market fluctuates, and because it fluctuates, you should also know that sometimes your account balance will also fluctuate. Okay, it is a fact. It is a fact. Okay, you lose some, you win some, but your goal or your objective should be about ensuring that you win the majority of your attempts. All right, that you win more trades than you lose. That's the main thing. Okay, it doesn't matter whether you lose 5 trades. All that matters is on the overall. All right, the cumulative outcome of your wins should outweigh the outcome of your losses. All right, if you get that, please type I do in the chat box. All right, if you get that, please type I do in the chat box. All right, all right. Thank you so much. Thank you so much. For all of you that have typed I do, I'm going to show you the bride. The bride that you just said I do to, I'm going to show you shortly. All right, because I'm seeing that a lot of you are males. All right, so welcome to your own wedding ceremony. All right, you're welcome to your wedding ceremony. So I'm going to show you your bride shortly. Okay, just stick around to the end of the presentation. Okay. Oh, fantastic! This is a mass wedding. I'm impressed. Wow, wow. So this is me joining several couples together in one single night. Amazing. Fantastic. All right, so let's go on. So we're still talking about how to control your emotions. Okay. So the first one is to be ready for the ups and downs. Okay. Understand fully well that the market is not always going to go in one direction. Okay. So sometimes you win, sometimes you lose some, but you must focus on ensuring that you win more than you lose. Okay. That your wins are larger than your losses. okay, so such that your wins can adequately cater to your losses, all right, and even swallow it up completely. Secondly, you must be patient. All right, you must be patient. You don't rush into trades based on impulses. And that's why I talked about your trading plan in the beginning. You must always remember your defined criteria. All right, the things that you have specified in your trading plan, you must always ensure that you remember it. Okay, it's easy to forget, actually. It's quite easy to forget, but you're going to have to make sure that you choose not to forget. All right, you're going to have to make that decision that you will not forget. All right, and then finally, learn from your mistakes. I believe I mentioned this earlier. Every loss is a lesson. All right, every loss is actually a lesson. So you must be able to analyze that mistake, all right, in order to know whether to adjust your strategy, okay, or do something that you didn't do before, all right, or stop doing something that was unproductive. Okay, so you must learn from your mistakes. That's how to keep your emotions under control. Okay, let's go on. Moving forward, discipline and psychology, the symbiotic relationship. All right, so here we want to talk about how exactly does discipline and psychology relate? All right, what's the relationship between these two? How are they interconnected? Okay, so the first thing is to know that discipline supports psychology. Do you get that? Discipline supports psychology. Because when you understand that, you realize that you cannot exercise discipline if your psychology or your mental frame is not balanced. Okay? And if your mental frame is not balanced, you cannot describe yourself as a disciplined trader. Okay? So your trading plan helps you to control your emotions because you now know what to expect and exactly how to react to it when it happens. Okay, so since you know what to expect and how to react when that thing happens, it makes you feel much safer. Okay, it makes you feel safer, so you're not under pressure and you're not bothered. Okay, because if you know that this thing is going to go down, all right, and when it goes down, this is what I should do next. Okay, you are simply going to wait for it to start going down, then you do what you have always planned to do. All right, so that should make you feel safer. So discipline supports psychology. Then psychology is a big boost to your discipline. What do I mean? A positive and patient mindset helps you stick to your trading plan and avoid rushed decisions, especially during unexpected moves. Let me say this. You know, a lot of you already have a psychology or a mindset about Forex or about trading that this thing is difficult. Okay, and the truth is that as long as you retain that opinion, that mindset, you're always going to find it difficult. That's a frank truth, right? I'm not trying to sweet talk you. Okay, if you believe that Forex is difficult, you are actually going to find it difficult. And that is because your psychology is already wired to see it as a difficult thing. Okay, if you see yourself as a bad trader, as a terrible trader, as a loser, okay, there is no way it will not affect the results you get in your trades. Okay, so it's important to keep a positive mindset. All right, a positive mindset that is also patient, that is not in a hurry to conclude and jump to conclusions that, oh, I'm a loser, oh, this thing is not working, oh, Forex is difficult, oh, I can't cope, oh, I will never make profit. Okay, so it's important that you maintain a positive and patient mindset so that you are able to stick to your plans. All right, you're able to stick to your plans and avoid rushed decisions, especially when the market moves in a way you were not expecting. Do you get it now? So based on this, you can now be able to balance your discipline and your emotions. All right? Balance your discipline and your psychology. Okay? So based on this that we have discussed, because both of them depend heavily on each other. Your discipline depends on your psychology, and your psychology also depends on your discipline, right? In order for it to generate the maximal productivity. If you're with me, I want you to drop an emoji. Let me know that you're following me. I'm actually tempted to sing, if you're happy and you know it, clap your hands. But this is a presentation, so I don't think I would be able to sing that well. Fantastic, fantastic. I love the reactions. Keep them coming, keep them coming. Thank you so much for those reactions. Thank you so much. Oh, beautiful. So, consistency in trading. How do I become a consistent trader? All right. How? Because the truth is, you need consistency to finish. All right. In the words of what's his name now? Denzel Washington. All right. He said, without commitment, you will never start. All right. And without discipline, you will never finish. Okay. So it's important to have a balance between commitment and discipline. All right. Because you don't just want to start trading, you want to ensure that you are here to see yourself become profitable in the financial market. All right. So that is why we're talking about consistency. Oh, fantastic. Good. Let's go on. All right. Psychology also highly survives on strategy. No, I don't think that is expressly correct. All right. Do I mind showing you how I would trade on any asset chart? The truth is, if you follow my analysis on the FBS website, you know right now that I have a variety of adaptations to my approach. All right. Sometimes I trade pure retail concepts, support and resistance with the stochastics, and I just take my trade and up in. And on the overall, at least for the past 4 years, I have had more than 70% accuracy in my trades. Okay. So it's not that your psychology, your strategy affects your psychology. It is that because of a defect or a deficiency in your psychology, all right, it is beginning to affect the results you get from your strategy. Okay. So when your psychology is bad, no strategy will work for you. Okay. However, if your strategy is bad and your psychology is bad, then I must say there is no hope for you. I'm sorry to say, but the truth just has to be spoken. If your psychology is bad, your strategy is bad, then all I have to say is, man, you must be the best donor in the 21st century. All right, because of course you're doing free giveaways to the market. So that's why I believe that's why Samuel is saying psychology depends on your strategy. I don't think that's correct. All right. On the other hand, it is your strategy that relies on your psychology. Because no matter how good your strategy is, if your psychology is bad, all right, I mean bad, terrible, you would never progress. Do you get it now? Okay, fantastic. So consistency in trading does a couple of things. First of all, your consistency in trading helps you to follow your plan. All right, because when you follow your plan, you are therefore able to achieve better results, okay, because you can easily predict what the outcome of each decision you make would be. Okay, so consistency helps you follow your trading plan. Okay, and because you are following your trading plan, you are able to get even better results in your trades. Okay, also consistency in trading helps to reduce emotional interference. Okay, because now you know exactly what things to do when you see certain things. Okay, so you know that when I see this is how to react to it. When I see this is what to do to it. Okay, so it limits or it minimizes the interference of your emotions, all right, into the outcome of your trades. Do you get that now? So your emotions are not all over the place because you have very clear directions on what to do when things go your way and when things begin to go otherwise. Okay. Also, consistency in trading leads to a clear-minded execution that helps to eliminate doubts and helps you make better decisions. So when you have consistently done something over time, okay, you now have a clear-minded execution. So, sorry, such that you know when you're taking your trades, okay, your mind is focused. Okay, there are no distractions from doubts of whether it's going to end up profitable or not. You know, there's no distraction in essence. All right. So you have a clear-minded execution and you're able to follow through your trading plan because your mind is balanced. All right, you're mentally balanced. Okay. Then also consistency in trading helps you develop a growth mindset. Okay, consistency in trading helps you develop a growth mindset. What does that mean? Because you have consistently done it over time, okay, your growth, your progress becomes more noticeable. Okay, the level of progress that you have experienced, that you have recorded, becomes more noticeable. All right, so that even you yourself can see that you are improving, you're growing, okay, based on your consistent practice. All right. Also, consistency in trading expands your trading experience. All right. Because you're consistently doing the same thing over and over and over again. All right. You build experience in that thing. Okay. You build experience. And as you build experience, your confidence increases. Okay. For example, if I've done consistently the same thing to get results for the past 4 years, it simply means that I have gathered certain experience, all right, that has now become my confidence. So because I have experienced a whole lot of things in the market and I was successful in spite of all of that, I am able to just naturally exhibit a greater deal of confidence. Okay? And your consistency also helps you gain credibility among traders. Okay? If you're on this call right now, your trading mentor has had 15 different strategies in the past 2 years. Okay, you need to run. You know, your trading mentor is always teaching you, oh, this is the latest, this is the latest, this is the latest, this is the latest. And he has shown you like 15 different strategies. All right. They are not interconnected, 15 different strategies using several different indicators. Then you are at risk. Okay. So when you build consistency, what happens is that you gain credibility even among your fellow traders. Okay. Thank you so much, Patrick, for that compliment. So now let's talk about your trading plan. Okay. It's becoming practical now. So let's talk about your trading plan. Your trading plan is your map to effective trading. All right. The same way you look at the map and then it tells you turn left, turn right, especially if it's a Google map. All right. You know, that's exactly what your trading plan does for you. It guides you to trade effectively. Okay. It guides you to trade effectively. And then your trading plan also outlines every aspect of your trading journey. Your entry points, your exit points, your risk management, your trade execution guidelines, your trade management principles, and things like that. Okay, so it outlines every single aspect of your trading journey. So how exactly should your trading plan look? Okay, or what should your trading plan look like? We're going to start from this column here. Okay, we're going to start from that column there. So first of all, your trading plan must contain your strategy rules. All right, what are the rules of your trading strategy? And what are those rules? The strategy rules, number one, what markets does your strategy work for? All right, there are certain strategies that only work on gold. There are some strategies that only work on the major pairs. All right, GU, EU, maybe AU or USD card. Okay, there are strategies that only work on such markets. Okay, there are strategies that only work in Forex that cannot work in the crypto market or the stock market. Okay, so your strategy rule begins with what market do I apply this strategy on? Okay, then secondly, what times of the day do I trade? Okay, does my strategy give better results during the Asian session? Does it give better results during the New York session? Okay, the previous slide, hold on, let me see. This is all that is on the previous slide. So, what times of the day to trade, all right? So your strategy rules also includes things like, okay, do I trade the New York session? Do I trade the London session? What session gives me the best results? Okay? Then part of your strategy rules talks about your entry rules. Okay? What are the things that I see that indicates that it is time to take a trade? Okay? What are the things that I must see? Okay, whether it's an head and shoulder pattern, double top, double bottom, overbought, oversold of an oscillator, whether it's MACD, whether it's moving average crossover. What are my entry rules? All right, all of that must be under the strategy rules aspect. Okay, so what are the entry rules? Then how do I place my take profit? If I am trading right now, where would my take profit be? How do I know where to put my take profit? And how do I know where to put my stop loss? Do you get that now? Then after your strategy rules segment, the next segment is the risk control segment or the risk control section. And that section talks about the minimum risk to reward ratio that you're targeting. All right. Well, Sozo, I might do something along that line. I can't promise, but I'll try. So risk control, okay, we'll talk about the minimum risk to reward ratios. All right. What is the lowest point I want to see? If I'm going to take a trade, am I targeting at least 1:2 risk to reward? Am I targeting at least 1:3, 1:5? What exactly is the minimum risk to reward ratio that I want to work with? Okay. Then secondly, what percentage of my account am I going to risk per trade? Am I risking 10%? Am I risking 15%? Am I risking 1%? Do you get it now? So what percentage of my account am I risking per trade? Then finally, under risk control, all right, what is the maximum drawdown allowance? Okay. Is there any other person who cannot see my screen? Bukari, I think my screen is pretty clear. It's pretty obvious. People can see it. Habib Yusuf, you can't see my screen too. Oh, of course, a lot of people can see it. So Bukari, please check it. Oh, all right, beautiful. So under risk control, all right, you want to check what is your maximum drawdown allowance. What do I mean? How much are you willing to, is the maximum you are willing to lose per day? All right. If I am risking 1% per trade and I have a maximum risk tolerance of 4% per day, it simply means that once I take 4 trades that hit stop loss in one single day, what do? I close my MetaTrader, I pick up either my PS or I carry my bicycle and then I just play. I with me, because I have reached my maximum drawdown allowance for the time being. Do you get what I'm saying now? Okay, Peter, for that mentorship offer, all right, tonight we're going to be picking the first 10 to answer the questions correctly. All right, so please just hold on till when the questions come up, all right, and try to be among the first 10 to answer the question, but also ensure that your email address that you used to register your FBS account is written together with your answer. Right? Everything must be written together in one single comment. Okay? And it has to be among the first 10. But let's go on. Your risk control, that section ends when you talk about your maximum drawdown allowance. Once I lose 4 trades in a row, I go out and I enjoy myself. Okay? I go out and I just play and I just forget about the whole thing. Then the execution aspect. All right, now this one is not necessarily going to be on your trading plan. All right, because the execution talks about what broker you are using, what platform, what screen layout. Okay, and if you're asking yourself what broker to use to execute your trades, I don't think that that's a question that you should be asking. Why? Because of course the broker is FBS. Okay, what platform? Of course, we have MetaTrader 4, we have MetaTrader 5, we have the web trader. All right, so that's platform. All right, so that's why I said this doesn't necessarily need to be written down in your trading plan. Okay, then there's also the screen layout, which of course I'm sure that majority of us trade in the portrait, in the landscape mode. All right, I didn't say you should drop your email addresses right now. Okay, we're going to get to a section where I am going to ask questions. All right, just make sure that you are among the first 10 people to answer those questions with your email address included. All right, so when I ask those questions, you're going to see it on the slide. When I ask those questions, ensure that you're among the first 10 people to answer correctly with your email address included in the answer. All right, so please do not send your email addresses right now. Okay, thank you for that. Then the next content of your trading plan is your routine, all right, which revolves around your pre and post game ritual. What do I do before I start to trade? All right, what do I do after I have opened a trade? That's why I said for me, my pre-game ritual, all right, or before I go to trade, one of the first things that I like to do is, I wake up in the morning, roll over to the other side of the bed, ask my wife to just pat my head a little bit because I'm ready to go trade. And then when I wake up, when I get off from the bed, just shower, freshen up and go to trade. All right. Then after I have taken trades, the next thing I do is I walk around, I play games, go visit friends, do whatever it is that I'm able to do within that time frame, or probably even sleep. All right. Because as some of my friends will tell you, I love to sleep. I don't joke with my sleep, but that's just part of my post-game ritual, all right? So that I don't get to interfere with a trade that I have already taken. You understand now? So how do I review and journal my routine? Okay, so you need to also ask yourself, okay, how do you review your trades to, to assess which ones went well and why they went well, and which trades went bad and why they went bad. Okay, so it's also part of your routine that you can construct or write down in your trading plan. Then finally, skills growth. This is the part or the portion where you get to analyze how well you have grown over time. Okay, so you can come here to this particular section and ask questions like, how can I increase my win ratio? All right, how can I increase the ratio of trades that I win to the ratio of trades that I lose? Okay, so how can I increase my wins? How can I reduce my losses? Then what types of trades am I better at? Okay, am I better at short-term trades, long-term trades? Am I better at swing trades? Am I better at taking sell entries or buy entries, whatever? Okay, but that is going to come when you start to assess the trading results. Okay. So components of a trading plan, the first one is your precise entry and exit point. All right, precise entry point, strategic exit point. All right, those are part of the components of a trading plan. So you have to define your criteria, like what are the things that I see when I want to enter a trade. Whether it is going to be based on technical indicators, whether it's going to be based on candlestick patterns, whether it's going to be based on support and resistance levels, and which type of signal is the best type of signal to trade. Okay, like I said, I'm going to show us a simple strategy, a very simple strategy that has worked for me time and again in the past. Right, it's a very simple strategy, but damn, it works fantastically well. Okay, but that's that's if you guys are going to be patient enough to allow me show you. Okay, so if you feel like you're going to you want to see me show you that simple strategy, all right, I want you to just type in the comment section, show me. Right, if you want me to show you that simple strategy at the end of this presentation, just type show me. Let's see, let's see, let's see. Fantastic. Oh, you guys are so fast. How do you type show me in a second? Wow, interesting. But nonetheless, thanks for the responses. Let's go on. All right, so precise entry points. All right, so you want to define all the things that you have to see in order to enter your trade. All right, then strategic exit points. You want to be able to know what are the criteria that you see in order to exit your trades. Okay, so when I'm exiting my trade, do I close the trades outrightly? All right, do I close the trades outrightly, or do I lock profits by moving my stop loss to break even? Or do I trail my profit? Or do I have target prices, all right, like TP1, TP2, TP3? Okay, do I have stuff like that? Do you get what we're talking about now? So how do I exit? Okay, where should I place my stop loss? When my trade is in profit, how do I modify? Do I break even? Do I have targets like TP1, 2, 3? Do I take partial profit when it gets to each of those TPs? Or when it gets to TP1, do I just lock profit by moving stop loss to break even and wait for price to just continue soaring? All right. Then let's talk about when to enter and exit trades. All right, when do we enter and exit trades? Emmanuel, if you have a question, there's an option down there to type questions and answers. All right, so you can go to that section and type in your question and answers. All right, fantastic. So trend. So let's talk about strategic entry timing, right? How to time entries and all of that. Now, no matter the type of trader you are, okay, you're either going to be trading one of these two. It's either you are going to be trading trend continuations or you're going to be trading reversal opportunities. Okay. If you're trading trend continuations, it means that you are entering your trades during a pullback, all right, or towards the end of a pullback so that you can capitalize on the resumption of the trend. Okay, so if I'm trading trend continuation, for example, in a bullish trend, it simply means that while that bearish retracement is going on, all right, I find out where the bearish retracement is likely going to end, and then I can take my trade from that point. Okay, I can capitalize on that since I know that the bullish trend is likely going to resume from that level. Okay, do you get it? But if I am trading reversal opportunities, okay, by looking for signs of trend reversals, I can start by looking at things like demand and supply. All right, Emmanuel, the question you asked is beyond the scope of this class. All right, it's beyond the scope of this class. That commodity is not recognized by the sponsors of this webinar. So I'm sorry I will not be able to provide answer to that question. Do I trade it? Yes, but can I provide answers on this platform? No. So reversal opportunities. So if you're looking at trading reversal opportunities, it means that you're looking at demand and supply. All right, when price gets to your demand or supply, you can now combine that with candlestick patterns. Okay, so you can do demand and supply plus candlestick patterns as a strategy for reversal opportunities. You can also use trend line breaks, all right, break and retest of a trend line to catch reversal opportunities, all right. And you can also use chart patterns, all right, chart patterns like head and shoulders, inverted head and shoulders, cup and handle. You know, these are some very, very probable, all right, highly probable strategies for taking reversal trades, all right, for trading trend reversals. Do you get that? So where should your take profit target be? It's important to set specific profit levels based on your strategy, all right? And that can depend on, that can be divided into probably you're targeting exiting your trade once you have made 3 times your risk, all right, which would be exiting your trade based on risk to reward ratio. All right. So when I open a trade and I have made 3 times my risk, all right, I'm risking 1%, I've made 3% profit, close me out. All right. I don't necessarily want it to get to any major take profit point. I just want to close my trade once I have made 3% profit. Okay. So your take profit target would depend on a couple of factors, of which the major one is still going to be your personal approach, all right, your personal strategy. Okay. Then talking about your stop loss strategies, all right, your stop loss strategies. It's important to always use a stop loss because the stop loss is the best way to limit potential losses. All right, the stop loss will prevent you from losing more than you are willing to risk. All right, so if I'm willing to risk 1%, wherever my stop loss is placed, it will be placed such that I will not lose more than 1% of my account. Okay, so the stop loss can be that reliable tool that helps protect my capital. All right, and if I have entered a trade and the trade is in profit, I can also use the stop loss to protect the profits that I have already made. All right, so I can use the stop loss to either protect my capital from being lost, or I can use it to protect my profits as the trade is moving in my favor. Okay. So let's look at how to plan your trade. If you're enjoying yourself, can you just drop an emoji? It's looking like, we're all getting quiet. Yeah, get in the groove, get in the groove. Yeah, 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 yeah. Fantastic, fantastic. All these married men that I just gave it, that I just gave brides tonight. Fantastic. This is a lovely space. I'm enjoying myself. Fantastic. Okay, so let's talk about how to plan your trades. So first of all, before you trade, you want to ask yourself, what is the trend? Okay, what exactly is the trend? Is the trend bullish? Is it sideways or is it bearish? Are you following me? If the trend is bullish, then the next question is price at a support? If the trend is bullish and now price has gotten to an area of support, it means that I should buy. Okay? It simply means that I should buy. But if the trend is bullish and price is not yet at a support, what do? I leave it. I don't trade it. Okay? If market is bullish and price is not at a support area, I leave that market. I leave that commodity. I won't trade it. If the trend is sideways, all right, if the trend is sideways, what do? I simply wait for price to break out of that consolidation. All right, that's the best thing to do. Wait for a breakout. All right, that's why you hear that a lot of people trade break and retest. When the market is sideways or there's a consolidation, wait for a breakout. Now, if the trend is, on the other hand, bearish, the next thing I want to do is, now that I know that the trend is bearish, I simply ask, is price at a resistance? All right, and I'm doing this, to clarify. I've forgotten who it was that asked if I was going to be showing a strategy. All right, this is a strategy, and it's a very formidable one for that matter. Trend is bearish, price is at a resistance. If it's at a resistance, I sell. All right, sorry about that. That should be sell. All right, that should be sell. Okay, so if price is at the resistance, I sell. Why am I selling? Because the trend is bearish. But if the trend is bearish and price is not yet at a resistance, what do? I leave it. I wait for price to get to that resistance. Okay, so this now, you can now start to build on this in different directions. Say, for example, the trend is bullish, price is at a support, all right? Then I can add another confirmation to price being at a support. What kind of confirmation? Price is at a support, all right? And then I'm using the RSI. Did you hear that? I'm using the RSI to confirm. So price is at a support and the RSI is already oversold. What does oversold mean? It means that the sellers are already weak and there's a high probability that the buyers will take over. Okay, so we are in a bullish trend, price is at a support, all right, and then the RSI is oversold. What does that tell me? I can buy. All right, moving averages simply serve as a type of support and resistance. All right, that's all moving averages are. It's a type of support and resistance. So if the trend is bearish, price is at a resistance, and my RSI or stochastics is overbought. All right, either the RSI is overbought or the stochastics is overbought. What does that tell me? I can sell. Okay, so I can use that oscillator, whether it's the RSI or the or the stochastics, I can use those oscillators or even the awesome oscillator, whatever. I can use that to confirm more, all right, to add a confluence to the fact that price wants to keep going bearish. You can use the default RSI. You actually can. You can. Can I relate this strategy with how news release affects it? Of course, news will always affect your technical analysis. All right, always. So if you don't want news to affect you trading like this, all right, trading this strategy, remember I also mentioned earlier that you need to determine what time your strategy works best. All right, what are the conditions that helps your strategy to deliver the best results? And for me, I wouldn't recommend that you trade this strategy when there is a heavy or a hot news release. All right, when there's a high impact news release or a volatile news release, I wouldn't recommend that this should be your strategy. Are we clear on that now? What time frame is it best to use this strategy on? 1 hour, 4 hours. Those are the time frames I would recommend for using this strategy. 1 hour, 4 hours. If you're learning, I want you to just drop an emoji. If you're learning something interesting tonight, just drop an emoji. You know, I want to feel happy. I want to feel fine. Beautiful. I'm going to take a sip of water. Just hold on. Don't go nowhere. Beautiful. I'm happy you are happy. So our happiness is mutual. I return it to you, my brother. Yeah, Methodias. Take your knuckle back. I return it. All right, so beautiful. So I'm really happy that you guys are getting, you're getting to see this in better light. Okay, so you see that everything that we have discussed so far, it all connects. All right, it all connects. Okay, so you don't want to leave behind your psychology because you're looking for the best strategy and lose sight of your discipline. Okay, so now let us talk about how to know whether to hold or to fold. All right, and right now, if you think what we're talking about here is gambling, then I think you really need to apologize to us as your brokers. All right. Because when I say knowing when to hold or when to fold, I'm simply talking about knowing whether you should keep holding a trade, all right, or whether it is time to run away, right? Close that trade with whatever small profit you have made and run away. Okay. There's an African adage. It says, "He who fights and runs away will live to fight another day." But you see, that one that fought. When it was time to run away and go and rest, he refused to go. He will die that day. That's the day he will die. Are you with me? That's why Yoruba people will say, "Moja mosa loye akin." Tá a bá mọ̀jà, tá a bá mọ̀sá, àìpẹ́ lórí oyè. And don't worry, if you're not Yoruba, you definitely will not know the interpretation of that. All right? You definitely won't understand that. Of course, if you want to know how to avoid the news, FBS will always give you heads up in the Telegram group. Whenever there's a high impact news, we'll always tell you. In fact, we tell you from the start of the week. All right. And even when the news release comes up, we tell you. In fact, for some of the news releases, we trade them live on our YouTube channel. All right. On this very YouTube channel. Oh, Desmond, come on. You don't have to get that. It's a Yoruba adage. All right. So just leave it. Just leave it. Probably Unless you're planning on marrying a Nigerian lady, then I can, a Yoruba lady for that matter, then I might be inclined to interpret that to you. But otherwise, don't bother. Okay, so let's go on. All right. So we've divided this slide into two different compartments. All right. What are the things that you see that tells you to keep holding on to your position? All right. And then what are the conditions that should make you close your trade and run away? The first one, all right, which is what you should see in order to keep holding on to your position, is if the market conditions, hold on, please. Let me confirm that nobody's mic is on. Is the noise reduced now? Because honestly, from my end, I'm not really hearing anything. Because as far as I'm concerned, I think it's perfectly fine on my end too. Not getting any feedback of noise or anything. Beautiful. So maybe Steve, probably you're using an earpiece, probably one of this amazing Chinese products. So please check that, okay? Oh, there's a chef on the call. Oh, fantastic. There's a chef on the call. Please, chef, permit me to visit you soon. All right, so let's go on. Let's go on. So if the market conditions that you're seeing, all right, are still attuned to your strategy, okay, don't be in a hurry to close that trade. All right. If, for example, you are seeing that the market is still going the way you believe it was going to go, all right, or the way you predicted it was going to go, all right, you can keep holding on to that trade, all right, to that position. Steve, I'm sorry it's not from here because my mic is the only mic that is on, and I don't think there's anybody watching anything here right now. And of course, I'm pretty much alone. As you can see, there are no angels with me watching movies or news. Okay, so also you can allow your profits run if your current trade is performing well. Okay. Also, you've gotten 1:3. Okay. You've gotten your 1:3 risk to reward, but you believe that it is still going to keep going further. So the best thing to do is to allow your profits to keep running. How do you do that? You simply add add a trailing stop order to that trade. Okay, you simply include a trailing stop order to that trade, which is simply an order that will continue moving your stop loss as price continues to go your way. All right. So if you are buying and price continues going higher, the trailing stop will follow, will keep following that trade. All right. So that in the event that there's a very sharp reversal, you would have already been closed out of the trade with your profit intact. Okay. So what conditions should make you run away completely and avoid what's going on? Simple. You must have a maximum risk percentage, which I talked about as your drawdown limit. Okay. Set a maximum percentage of your capital that you are willing to risk per trade or in a given period, which was why I talked about per day. Trailing stop is I only know how to use it on MetaTrader 5 on desktop. All right, I'm not sure it's applicable on mobile. Okay, I'm not sure it's available on mobile. Trailing stop is adjusted in pips. All right, it's usually calculated in pips. I'm really not sure I can show it here because, but definitely you can go on YouTube, check for videos on how to set a trailing stop or how to use a trailing stop. All right. Sozo, this is an FBS webinar. Why are we teaching you how to trade if you're not going to trade with us? We are brokers. We are FBS. We want you to trade with us. That's why we're teaching you how to make money from Forex. So do I recommend any broker for Forex? Of course, the hell I do. I am recommending FBS with my full chest, bro. Don't do that, man. Don't do that. Thanks, Carlton. FBS all day, every day. That's how we do it here, bro. Don't do that, Suzo. Don't do that. Don't mind me. Don't mind me. I was just trying to have some fun. All right. So thank you. Yes, that's your bad. Awesome. Thanks, Abib. All right. So let's talk about trading styles and time frames. All right. Remember, I talked about the fact that your trading success will be dependent on your observation. What are the practices that give you the best results? Okay, what are the practices that give you the best results? So you need to be able to check that. Hold on, please. I'm trying to do something here. Please hold on. All right, so strategies, like I said, some of them work better within certain periods. All right, so let's talk about trading styles and time frames. Okay, so first of all, we'll talk about scalping. So what is scalping? Scalping is simply short-term trades, all right, that are taken within few seconds or few hours, all right, which makes high volumes of small profits, all right. So when they just depend, scalpers depend on small movements, right, and they leverage those small movements with huge position sizes, right, with high volumes. So if it's 10 pips or 15 pips, they can trade it with like 5 lot sizes, 10 lot sizes because they are scalpers. All right. Day trading, on the other hand, is short-term trades within 1 day, and that focuses rather on quick price movements. All right. So whereas scalping focuses on small movements, day trading focuses on fast movements. All right, quick price movements. All right, so short-term trades within 1 day, focusing on quick price movements. Swing trading is what I do, all right, and that involves holding trades for several days in order to capture intermediate price swings. All right, so you're holding the trade for several days because you're looking at, your forecast, right? You want to see it play out entirely. So let me answer Desmond. What time frame is best for scalping? If you're a scalper, the 15 minutes time frame, 5 minutes time frame are the best time frames that I would recommend. All right. But you must also remember that having proper top-down analysis is crucial. Okay. Top-down analysis is simply you correlating what's going on the higher time frame with what is going on the lower time frame. Okay. Good. So that is for swing trading. Okay, then there are position traders. What do position traders do? They are long-term traders that hold trades for as long as weeks or months. All right. And they usually do that in order to capture longer market trends. Right. They just want to capture broader market trends. And that's usually for people who have huge trading volumes. All right. Who have very, very huge trading capital. And they are not in a hurry to, multiply their money or make massive profits. Okay. They just want to grow their portfolio, not necessarily multiply it. They just want to grow it. Okay. So that's talking about trading styles and time frames. Then now we talk about market conditions. Okay. So when you want to know when to trade, you want to first of all check, am I scalping? Am I day trading? Am I swing trading? Am I position trading? Okay. If, for example, I am scalping, I want to now ask myself, do I want to trade? Do I want to scalp on very volatile commodities? Big Chef, don't worry, you will get the recorded version on our YouTube channel. So when you decide that, okay, I want to scalp, all right, then you ask yourself, do I want to scalp a very volatile market or a calmer market? All right, volatile markets like US 30, US 100, gold, all right, silver, Bitcoin. Are those the kind of commodities I want to scalp, or do I want to scalp calmer markets? All right, calmer markets like USD CAD, calmer markets like GBP CHF, calmer markets like CHF JPY. All right, though CHF JPY is not exactly calm, but at least it can pass for a calm market. Okay. Then you also want to ask yourself, do I want to trade the news? All right. Because as you can see, we have it written here that you should be careful when you are trading major economic news. All right. Because oftentimes major economic news can lead to unpredictable price movements. Okay. And that is why for some of the major economic events, we actually have a live stream. All right. A live trading experience on our YouTube channel. Just go on YouTube, type FBS analytics and education. All right. FBS analytics and education. All right. Just type it. All right. FBS analytics and education. You're going to see our YouTube channel and see some of the live sessions that we have had in the past. Okay. So that you get to relate better with some of these things that I have said. So here's the breakdown. Okay. If you are scalping, the best time frames to trade are between the minutes and the hourly time frames. All right. That's why I said you should check prices between 1 to 15 minutes. All right. If you're scalping, you just want to monitor what's going on, what's happening to your trades every 1 minute or every 15 minutes. Okay. Then when you are day trading, the best time frame you would work on is the 1 hour and the 4 hours time frame, which was why I was recommending earlier that if you're going to trade that strategy that I taught you, all right, using the support and resistance plus oscillator, all right, trend plus support and resistance plus oscillator, I mentioned that you want to trade it mostly on the 1 hour or the 4 hours time frame. Okay. So if you're day trading, you can check prices every hour, all right, every 60 minutes. But if you're swing trading, it means that you're trading between the 1 hour to the daily time frame. All right, you're trading between the 1 hour to the daily time frame, and you can monitor your trades every 4 hours. All right, you can check back on your trade every 4 hours. It's not compulsory, but it's recommended so that you're not coming to check it every 5 minutes and then you're being discouraged by every single move, every single shift that the market is undergoing. All right. At least if you're checking every 4 hours, you've given your trade enough room to breathe. All right. Enough room to breathe, because of course you have to let the poor breathe. So going on to position trading. All right. the best time frame for position trading is the daily time frame and the weekly time frame. All right, the daily time frame and the weekly time frame. And if I'm trading the daily and weekly time frame, when should I check the price? How often should I do that? You simply check it every day. All right, every day. Why is this important? Because from this now, you would know, you can determine what type of trader you should be. Okay, depending on your availability. Am I available to check my trade every 15 minutes? Am I available to check my trade every 1 hour? Am I available to check it every 4 hours? All right. So depending on how busy your schedules can get, you can determine which type of trading approach is best for you. So in summary, all right, in summary, discipline helps you to follow and improve your trading plan. All right. It helps you to improve and follow your trading plan. It also helps you to master risk management. To master risk management, control your emotions, and make better decisions overall. All right. So discipline overall is important because it helps you make better decisions. In trading, discipline is inextricably linked with psychology. And what this means is that in trading, you really cannot separate between discipline and psychology. Both of them are intertwined. All right. Also, your trading plan is your success guide. Why? Because it gives you a systematic approach, a logical, a rational approach with entry and exit strategies, as well as risk management tools. Okay, so your trading plan is actually very crucial. And then finally, when you understand your particular style, your own personal style, all right, what time frames work best for you, okay, you've also mastered how to choose the right moments to trade. All right, so understanding your own style, your personal style, the time frame that works best for you, and choosing the right moments to trade your own strategy is what comes together to make you profitable as a trader. All right. So if you got that, can you please drop an emoji? Let me see the emoji. Let me see the emoji. If you understood all of this that we've talked about so far, please drop an emoji. Keep it coming, keep it coming, keep it coming, keep it coming. Yeah, give me some more. Give me some more, guys. Give me some more. Beautiful, 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 beautiful. Thank you so much, guys. Thank you so much. So, these are the questions for this week. And the first 10 people to answer this question correctly using the format that I am going to show you below. So can you see the formats that I have shown below? All right. So the answer to question 1, you type it out. The answer to question 2, you type it out. And in that same comment, you also type out your email address. Okay. Answer to question 1, answer to question 2, and your email address. Okay. So question 1, what are the key aspects of trading psychology? Please ensure that you use the template I gave you. If you do not use that template, you will not be considered for the mentorship. All right. And remember, the first 10 people to send in their answers win 1 week free mentorship with me. Okay. So the first one what are the key aspects of trading psychology? Then question 2, what is a clear-minded execution? What is a clear-minded execution? So what are the key aspects of trading psychology? And then 2, what is a clear-minded execution? So keep your answers coming. We're going to keep the lines open for the next 5 minutes. All right, we just need the first 10 people to get it correctly. We just need the first 10 people to get it correctly. All right, 4 more minutes. Four more minutes. 4 more minutes. Three minutes more. 3 minutes more. 3 minutes more. Let's go, let's go, let's go, let's go, let's go. Let's see. 3 minutes, 3 minutes, 3 minutes. Three minutes, 3 minutes, 3 minutes. 2 more minutes. Two more minutes. Two more minutes. One minute more. One minute more. So, okay, and that is it. Thank you so much for joining me tonight on this third episode of Webinars for Africa. It's been an absolute honor hosting you guys. My name remains Adetola-Freeman Ogunkunle, and it's been an absolutely amazing night spent with you guys. Thank you so much for joining. The next one is going to be happening next week, Tuesday, which is the 26th of October. All right, 26th of October. I want to say a big thank you for joining once again. And till when next I come your way, bye-bye and see you soon. Bye-bye.